There are a couple of tech companies going public this week, and while the revenues look good, not making too much money. The first one we're going to talk about is FireEye. They are in the cybersecurity end of the tech business, and you know, cyber attacks are up front and big. It's all over the news. So most cyber security companies are doing well. Joining me is Director of Research at Equities.com, Francis Gaskins. Does FireEye look like it's going to pay off for investors?
Yeah, FireEye is one of these companies that investors are in demand. It's really in demand this week. And the reason is because it's got top line revenue growth for the last couple of years in the June 6 months of probably averaging 120% on a compound basis, which is huge. But what they did, they have about $63 million in revenue for the 6 months ending in June, but they're also losing about the same amount. So really they're betting the farm on increasing marketing sales and R&D. And their competitors are Cisco and other companies, you know, in the area. So they've got big competitors. I think that FireEye is more nimble, it's more quick. It's established a little pocket of interest there, and so they're betting that they can go and grab more market share with what they do before the big guys kind of come in on them. But they're the market cap at the price point mid-range at the price point was before they raised it was $1.5 billion. So with that kind of market cap, they can finance a lot of losses going forward. I think it's kind of a high-risk situation. It could pay off. It could pay off big. But at some point in time, they've got to get to break even. They have 48% of the revenue, and it's growing as in subscriptions, and the market just goes nuts when a company has top-line revenue and subscription revenue of that percentage going up. And they kind of overlook the loss rate for the now.
All right, then another one that's going public this week is Rocket Fuel. They're also in a really hot area, and that is online advertising. And so what Rocket Fuel does, it has this artificial intelligence. It can figure out what kind of ads you want to see, and it delivers them. Advertisers love this, but also, same story, good revenue, not making money.
Right. Rocket Fuel has probably averaged 120% top line revenue increase in the last 2 years in the 6 months ending June. So that's very favorable. It is losing a lot of money. Broadly speaking, it's in the same category as Tremor Video that came out and had top line revenue increases about 45%, half of what this one does. And Tremor Video tanked, and there's another one in June in the same category. But this one, I think, has a better AI system, has a better way to place it. And of course, there's the competition from Google, Yahoo, and other large companies. So they have a niche, and there again, the issue here is it's great they have top line revenue growth, go for it. But when will they get to break even? This one doesn't have any subscription revenue, so it's just standalone sales.
All right, well, there you have it. 2 tech IPOs in some very hot sectors. That's Francis Gaskins, and I'm Deborah Borchardt with The Street.